You know, every single great trading strategy starts with that little spark, that simple what-if moment. But how do you take that spark and turn it into a full-blown system you can actually trust with your hard-earned money? Well, let's break down the professional's roadmap for doing exactly that.
Look, coming up with the idea, that's the easy part. The real work, the thing that separates the pros from the hobbyists, is the journey from that idea to consistent, disciplined execution. So that's what we're laying out here, the roadmap to build a real trading system from the ground up.
Okay, so we've got this broken down into 5 main stages. First, we're going to turn that fuzzy idea into a sharp, testable hypothesis. Then, we get into the data to forge a real statistical edge. Next up, we write the master plan, your personal rulebook. After that, a final dress rehearsal to get you ready. And finally, we talk about going live and, this is so important, how to adapt. Let's get into it.
All right, phase 1. This is all about getting serious with your thinking. It's where you move past a vague gut feeling and define precisely what you're looking for. It's not just about staring at charts, it's about spotting a potential edge and then nailing it down with absolute crystal clarity.
So what are we really hunting for? We're looking for something called a market inefficiency. Now, that's just a fancy term for a repeatable pattern, a little statistical quirk in the market's behavior. Think of it as a small crack in the system that, if it shows up over and over again, can potentially be exploited for profit. That's the treasure.
So how do you make an idea precise? Just look at this example. We're not saying something fuzzy like, I'll buy Apple when it looks like it's going up. No way. We're defining the exact conditions. If the 50 MA crosses the 200 MA on this specific chart and the RSI is above 50, then this tends to happen. See, it's specific, it's objective, and you can actually test it. This level of detail is absolutely non-negotiable right from the start. Okay, so you've got a really clear hypothesis. Now it's time for phase 2, proving it. An idea, no matter how good it sounds, is pretty much worthless without evidence. This is where we go to the data and see if a real, quantifiable edge actually exists. This is the million-dollar question, right? It's not enough to just believe your idea works. You have to prove it with cold, hard numbers. So how do we do that? How do we go from a promising idea to statistical proof? Well, we do it with a really rigorous multi-step process. First, we backtest. We run our rules on years and years of historical data. We want at least 200 trades to get a good sample size. Then, we cautiously optimize to find the sweet spot. After that, we do something called a walk-forward test. It's like a simulation on data the system has never seen. And finally, we stress test it. We throw different markets and conditions at it to see if it holds up, or if it's just a one-trick pony.
Now, during all that testing, this is the #1 trap you have to avoid: curve fitting. This is where you tweak a system so much that it looks absolutely perfect on past data, but it's so fragile it just shatters the second it hits the live markets. What we're after is robustness. We want a strategy that works pretty well under a whole range of conditions, not one that works perfectly on just one old dataset. The goal here is consistency, not perfection.
All right, you've done it. You've proven you have a statistical edge. That's huge, but that edge means nothing if you can't execute on it day in and day out. This brings us to phase 3, writing your master plan. And let me tell you, this document, this is probably the single biggest thing that separates amateurs from pros. It's your ultimate defense against making emotional mistakes.
I want you to really let that sink in. When the market's going crazy and your money is on the line, your emotions, fear, greed, you name it, they're going to be screaming at you to do the wrong thing. In that moment, your pre-written, totally objective trading plan is the only thing that's going to keep you on the straight and narrow. It is your anchor in a storm. And speaking of that plan, this number right here is king, your maximum risk per trade. For most, that should be 1% of your capital, maybe even less. This is not a suggestion, it's a hard rule. It's the one rule that guarantees no single trade can ever knock you out of the game. This is how you survive. Your plan has to be brutally specific. I'm talking about defining every single variable, leaving zero, and I mean zero room for guesswork in the heat of the moment. From your exact entry and exit rules, to your position sizing formula, to your daily loss limits, if you ever find yourself asking, what should I do now? Your plan is not finished. Okay, the master plan is written. Now we're at phase 4, the dress rehearsal. Before you risk a single real dollar, you have to simulate the entire process. This is where you prepare your tools, your mind, and your execution skills for the real deal. This whole prep phase really has 3 parts.
About 30% of it is just making sure your tech setup is flawless. Another 20% is getting your head in the right space. But look at that big slice in the middle, 50%. Half of your time here is dedicated to demo trading, just practicing the execution of your plan, over and over and over again. And we need to put a number on that practice. We're talking about a minimum of 50 trades in a demo account. Why so many? You're building muscle memory. You need to follow your plan so instinctively that it just becomes second nature. No thinking, just doing.
And this right here is such a critical mindset shift. The point of demo trading is not to make a ton of fake money. Who cares? Your demo P&L is completely irrelevant. The one and only goal is to practice executing your written plan perfectly, trade after trade, with zero deviation. That is the only report card that matters in this phase.
And here we are. You've done the research, the testing, the planning, the practice. It's time. Phase 5, going live. This is where you step into the arena with real capital, but it's also where you start the lifelong journey of adapting and refining your approach.
But listen, you don't just dive into the deep end. You launch gradually. You start small, risking maybe a quarter or a half of your normal size, just to get used to the psychology of having real money at stake. Your only focus is perfect execution and journaling everything. Only after you've proven you can be consistent do you even think about intelligently scaling up your size.
So how do you know if you're actually being consistent? You track the data. Every single week, you have to review these key metrics. Things like your profit factor, your max drawdown, your win rate. These numbers give you a totally objective, unemotional look at your performance. They tell you if the system is working, and more importantly, if you are executing the system correctly.
And this whole process never really stops. It's a continuous cycle of refinement. You're doing deep dives every month, looking at trends every quarter, and reevaluating the whole thing every year. The market is constantly changing, so a professional trader's plan has to be a living, breathing document that evolves right along with it.
So, after all that work, all the research, the testing, the planning, the practice, you have a complete, professional-grade trading system. But the final question, the most important one, has nothing to do with the market or the charts. It has everything to do with you. The system is built. The real question is, are you disciplined enough to actually execute it?